Hi everyone, Troy Evans with Cinch Home Loans. In today's video, I want to talk about the difference between home sales and home prices. Last week, Fannie Mae released a report about home sales, home prices, and the economy. In this report, it says that Fannie Mae has lowered its 2022 forecast for total home sales to 5.6 million units, which would represent a decline of 18% from 2021. Does the home sales decline represent a decline in home prices from 2021 to 2022? No, it does not. In this same report, it says that we have now anticipated 2022 year-end home prices to rise 9% from 2021. Also, for 2023, we project home price declines of only 1.5%. Why is there such a difference between a huge decrease in the number of homes sold and home prices? Well, I want to refer to a couple of charts and some data by the Federal Reserve. Federal Reserve has housing inventory through active listing count in the United States. Looking at a one-year graph, we see that we bottomed out in early 2022, and we've now been steadily increasing in active listing count in the United States. But if we zoom out, going all the way back to 2017, we see that we're still below historical norms in active listing count. Okay, another graph. Housing inventory median days on market in the United States. Again, a one-year graph shows that we bottomed out in second quarter of 2022, and we've begun increasing since then. But if we zoom out to 2016, 2017 timeframe, we see that there's been natural ebb and flows in the housing market of median days on market in the United States. We are still below where these previous peaks have been. Okay, another graph. Housing inventory new listing count in the United States. One-year graph shows a lot of noise up and down. We look at a 10-year, we see that there's, again, naturally been some ebb and flows. New listing count has been on the decline. So why has there been a decline in new listing while also causing an increase in active listings? Well, I think one big factor might be housing affordability index. Now, this index, as shown by the Federal Reserve, recently went through some modifications. So we'd have to show a different index to show previous historical data. But if we look at the current one-year graph showing the housing affordability index, I want to highlight one thing. In this index, a value of 100 means that a family with the median income has exactly enough income to qualify for a mortgage on a median priced home. An index above 100 signifies that family earning the median income has more than enough to qualify for the mortgage on a median priced home. So we see that right now, we are currently back above 100. This summer, we did dip below. When we look backwards, we see a humongous affordability of housing. So what's happening right now? The Federal Reserve is very concerned about inflation to the point where it is tightening its monetary policy. That monetary policy tightening has had a direct impact on an increase in mortgage interest rates. That increase in mortgage interest rates has obviously had a direct impact on the monthly mortgage payment for any particular mortgage, any particular property. That's therefore translating into this housing affordability index. So somebody that is in a home, maybe they purchased it, maybe they refinanced it, either way, but they were in a home prior to this mortgage interest rate increase, they're sitting in a very good spot according to the data on their housing affordability, because they're in at a low interest rate and it could possibly be a much more affordable mortgage payment than what it would be today. So we're seeing a lot of those people are choosing and electing not to list their home and sell because it requires them to buy at today's mortgage rates, which would thus have a negative impact on their housing affordability. So it's interesting to see a decrease currently in the number of new listings while simultaneously being able to see a slight uptick in active listing counts. We're going to be watching this housing affordability index closely. The next release is coming out in mid-November, and we're really excited to see what kind of a picture that is telling for that recent data that'll come out at that time. So right now, home prices and home sales are two drastically different numbers. When you see sensationalized in the media a huge decrease in home sales, that doesn't mean that there's been a huge decrease in home prices. If you liked this video, if you like this content, like, subscribe, share it with your friends, hit us up in the comments for any specific things that you'd like to see us address in the future. Check us out again as some more data comes out.